order filled.
Alright, what's good everyone? Welcome back to a new YouTube video. In this YouTube video, we'll be breaking down the NQ short that I've taken today, catching just over 83 points. The basis of today's video will be a more foundational Power 3 lesson, as it's been about a year and a half since my first YouTube video, and that YouTube video was on the fundamentals of Power 3. And with how much time has passed, it seems a lot of people have forgotten the fundamentals. So we are going to do a bit of a review on how the fundamentals of Power 3, open high low close, open low high close works, what we look for, and overall how I got my bearish bias today by explaining that. But anyways, we'll show you guys the trade recording and then do our in-depth teaching and analysis afterwards. So first things first, we're going to show what I posted in my pre-market analysis, which I posted in my private group, my owner prospect group, my server. So when it comes to this, essentially, to summarize everything I said here, simply put, I want to see shorts set up back down to low of the day. The reason I'm not going to the long first is because there's no clear external high to target, since NQ at this moment was already above our previous day high and previous week high, and we had SMT with both those highs as YM was lagging behind. So right now, when it comes to the development of our daily power 3, we have an open expansion higher. There was no manipulation to support that expansion higher, and we're going to break that down, the fundamentals of that. And when it comes to being bullish, well, how would we be bullish when there's nowhere to target? The most simple aspect of understanding whether or not you should long or short, one, it should be development of your current power 3 that you're trading, and two, should be drawn liquidity. If you have no clear external drawn liquidity higher, even though price is pumping higher, you have no reason to enter long. And due to that, I was looking for lower prices back down to the daily open, as I said in my pre-market. And when it comes to the fundamentals of power 3, this is what we're going to break down. So you can refer to my very first YouTube video, and honestly, surprisingly enough, that happens to be my best YouTube video at 23,000 views, which is kind of surprising considering it's the lowest quality video that I have. Somehow it is the highest performing video. But anyways, when it comes to a power 3, we know there's a difference between power 3 and AMD, but nonetheless, in the fundamentals of your power 3, you want to see generally something like this. Whether or not you're bullish or bearish, let's just say you're bearish on a higher time frame, you want to see price accumulate, let's just say during Asian session, manipulate during London session, and going into New York session, you either want to see a reversal or perhaps we reverse prior to New York session, and then we play continuation of the initial first stage of distribution. That's one example, and that's a classic bearish daily power 3 pattern. There's also patterns such as what we saw today, where we open up and just immediately expand higher. We just immediately expand higher, and this tricks your quote-unquote retail traders, because they see bullish trend, they think price is going to be bullish. But no, every single expansion leg has to have some sort of manipulation leg to support that expansion. It's the fundamentals of power 3. In order to distribute, we have to first manipulate. We have to see it. And today, we had no manipulation lower to support higher prices. And this is what you see in your fundamental open, high, low, close, open, low, high, close. This right here, and I don't actually have a good example of this. We'll just do this. We'll split it in the middle. We have something like this. Whoa, what's happening? Where we have your open, as I'm marking out right here, give me a moment. You have your power 3 opening, open, no manipulation. Power 3 refers to your open, high, low, close, open, low, high, close. Here we have an open and high. We don't have a low. We don't have actual manipulation to support that expansion. So we open up, leave behind what is commonly known in the power 3 community as a DM, a devil's mark. We open up, we expand higher, no manipulation at the low of the candle, at the low of the power 3 to support that expansion higher. So in turn, we would expect price to then return back down to that power 3 open, put in that manipulation before we can even validate higher prices. So the overall mindset of today was a mindset of lower before higher. So even if the daily power 3 was going to end up being bullish later on, it did not matter, because no matter what, in order to even take a long position in general, we would have to see price come all the way back down to that daily power 3 open and then expand higher after that. It's more or less we can then validate expansion higher after that. Doesn't mean we have to or we're going to, but it means that if you are inherently bullish on a higher time frame, you can then validate longs once that manipulation is put in beneath there. But until then, you cannot. And so we would generally avoid longs altogether before then. And then so now going into market open, this is overall what we are presented with. In fact, let me go back just a little bit more. This is what we're presented with. We have the daily power 3 open, expansion higher, no manipulation put in underneath the daily open on NQ, so we can't validate expansion higher just yet. And a potential big question people might have is that, but fear, we did that on YM, we put in the manipulation on YM. You're not wrong. However, each of these indices are their own individual indice. And personally for me, based off my own experience and on data collection and just understanding of the market, tracking hundreds of power threes over the span of years, NQ tends to be treated as the main index. We want to see NQ put in the manipulation. We want to see NQ rebalance a range. We want to see NQ run out the data high and low. So if we form a data high and low cracking correlation, we want to see NQ be the one to run out that data high or low. And then the other two, ES or YM, putting in the filler swing. And that's just something based off personal understanding of how the three indices deliver together. And that's overall why, even though with YM putting a fair decent amount of manipulation, we still wanted to see NQ return down to the daily open. And then we get brought to market open, fast forward a few minutes, and overall we start to sell off. What can we take note of? The first thing we're going to take note of is the fact that we have SMT, or should I say had SMT with your previous day high. We removed it, but we had SMT with your previous day high. It was removed shortly after the market open, but additionally we also have SMT with your previous week high. As I'm going to mark out right here, that's YM's previous week high, or nope, marking out the wrong one. That is YM's previous week high. Here's NQ. And here is ES. ES and YM both failing to run out the previous week high. NQ does. Technically, for those who trade quarterly theory, never mind, we do not have any sort of additional SMT as YM kept grinding higher. On a lower time frame, go back here. After market open had initially displaced lower, this is overall what we are presented with. And when it comes to the time-based SMT in which I look for, that is not presented here on a lower time frame. All we have at this moment is that SMT with the previous week high. Nothing with the previous day high anymore. Nothing on a lower time frame. Nothing. As overall, on a lower time frame, all three of them are in sync. However, we continue to displace lower. In this displacement lower, we can see that we did form SMT with your previous 9-minute low. YM puts in a failure swing, NQ runs out the previous 9-minute low, and ES, we can check right here, also fails to, giving us SMT the previous 9-minute low, and from there we had initially expanded higher. And I saw a few people get cooked on those longs specifically because I saw price return back into discount of the range, specifically of the daily range. SMT the previous 9-minute low, SMT the previous 5-minute low, expansion higher. And that is not the worst decision in the world. But the reason as to why we cannot validate this, because sometimes we are going to see a daily devil's mark be left behind, but there's only certain situations in which we can validate that. We have to understand the higher time frame, the top-down analysis of our higher time frame power threes first. So the first thing we have to know is the fact that we are going into the end of the year. We're going into the end of the yearly power three, the quarterly power three, the monthly power three, going into holidays. Additionally, so overall in the higher time frame, there's no real strong trend right now. There's no real strong bullish or bearish trend. And even if we were to say we were bullish, we then have to see the weekly power three and daily power three support that. And so far within the development of the weekly power three, well, we had just opened up, and same thing on the weekly power three as we saw on the daily power three, we had no manipulation beneath the weekly open to even support a bullish week. So a lot of people are thinking, but fear, we're in a market maker buy model. You're right, but what do we have to see in order to support continuation of that market maker buy model? We have to see bullish power three development. And if we do not see that, we cannot validate it. So weekly power three. So let's just say for reference, if the weekly power three had already put in the manipulation for the week, we already put in the manipulation, we already are distributing higher within the weekly power three, perhaps we're on, this is like Tuesday or Wednesday, hypothetically. If this specific daily power three did this exact same thing, maybe on a Tuesday or Wednesday, we did everything that we did back here. The weekly power three already had its manipulation. Then and only then could we perhaps increase the probability of a setup such as this playing out. But because we did not, because the weekly power 3 is still developing, we are essentially just in the accumulation stage, we'll say. Because we have yet to manipulate within the weekly power 3 and we cannot validate the weekly distribution, we cannot then validate a early reversal within the daily power 3. Due to that, we needed to return to the daily and weekly open on NQ. And that is why any buy program that is set up back here had failed. Instead, what we end up doing, I'm going to quickly draw out my John liquidity, which was the low of the day. What instead we ended up doing was then retrace into a premium. In fact, specifically into OTE of this range, EQ. OTE perfectly reacts off the 0.705 level OTE, and when you zoom in on lower time frame, then forms an SMT, a cracking correlation, I say, with the previous moment high, as you can see right here and here, previous moment high inside OTE, and then from there we displace away. In that displacement away, we then get a 1 minute CISD. The reason we're drawing that out and not this out is because this is where the highest high is. This is a lower high. So we will look at the previous up close candles prior to the higher high. That's our CISD. This CISD could have been my initial entry, but I wanted to see just a little bit more confirmation because at this moment I was still a little bit uncertain just based off what we're presented with. Because why? Well, because we still have a lack of a lower time frame SMT at the highs. And here, when price was displacing higher, I was questioning whether or not we wanted to come up, put in a new high of the day, forming the lower time frame SMT, and then expand lower, or if we would, well, do something like this. What confirmed shorts for me was the fact that we retraced into OT of the range, cracking correlation to the previous moment high. From there, we aggressively displace away 1 minute CRSD, and then a cracking correlation with this 1 minute for value gap. As we can see, ES trades into it, NQ fails to, and then from there, that was essentially my entry. My entry was essentially just a reaction off of that little cracking correlation on the 1 minute, which was found here. Stop loss was at the for value gap. As to me on NQ, I wanted to see that be a breakaway gap as ES traded into it. NQ did not, meaning NQ does not need to. And that it does not apply every single time. That has to be up to your own data collection. It also has to be up to proper time frame alignment. There's very specifics, and this is more of a QT concept that I'm not going to go into depth on. But to put it simple, 1 minute CRSD, 1 minute displacement for value gap. ES trades into it, NQ does not. I entered off the reaction off that cracking correlation, and that was essentially it. And well, it had played out perfectly after that. And a question may have been that why did I not go break even once ES ran out this low and NQ did not? Very similar to what I said earlier, because I think I got filled a few points lower, and I might have gotten broke even. I don't. Let's see here. 715.5. If I had, so I usually have my stop loss a few ticks in profit, and I probably would have got stopped break even there. If I went break even, because I usually put a few ticks in profit. The reason I did not go break even here is because it's very similar to what I had said earlier about treating NQ as our main index. We want to see NQ rebound to range, NQ run off the data high and low, NQ put in the lower lows, higher lows, or no, lower lows, higher highs. We want to see NQ, we want to treat NQ as the main index. And here, one development of the weekly and daily power 3, still being super bearish. I didn't want to trust any sort of bullish SMT that we formed. That's the reason as to why I did not go break even here, even though I could have, but I did not. Ended up playing out completely right after that. Otherwise, that is a general breakdown of today. Any questions, comments, concerns, just leave those below. Otherwise, I'll catch you guys all in the next video.